Hey everybody, welcome back to the week 18 of the trading watch list. Now let me fix one thing that I have been doing wrong from last couple weeks is I've been calling the weeks wrong, and that's the reason why I have numbered the weeks moving forward. I've done it for a couple videos in the last 3-4 videos, but I'll fix all the entire playlist so you will know exactly as we progress through every single week. Back to my intro. So this series focuses on selling options to help you build a robust income stream that could be in addition to your main job or other side hustles. If you are new to this channel, I highly recommend that you subscribe and save this watch list, and you can follow along every single week and see the progress that we have made. And if you are a returning subscriber, welcome back. Like always, we will start off with S&P 500 performance. We'll take a look at what earnings are coming up next week, see if there are any major events as well. And then we are right into our trades for last week. What are we looking for next week? And if you end up finding any value, make sure you give us a like. And without further ado, let's dive in. Last week was an amazing week because the main tech earnings began. We had Amazon reporting earnings, we had Google reporting earnings, we had Meta reporting earnings, and we had Microsoft reporting earnings. So those were some major players that reported earnings. However, that did not save the market from being down overall throughout the week. You can see it was a sea of red, barring one or two stocks here and there that was in green. Most of it was pretty bad. Now next week, the main event that everybody is going to wait and watch is going to be the November 1st, when we will have the federal interest rate decision. Now if you have been following the recent events, most likely there will be no interest rate hike, at least for this round. However, we may see another rate interest hike of 25 basis point maybe in December. We'll see how that plays out. Next week also is going to be major earnings week. We have some major companies reporting earnings. One of my favorite companies that we actually invest in and we have covered on this channel many times is going to be SoFi reporting earnings before market open. I will be doing a post earnings SoFi video to see what the stock is doing, because SoFi stock has had a major run up earlier this year, but then is again back into the $7-8 range. We'll take a look at the technical analysis and see where does the stock move from here onwards. Now there are a couple other stocks that are very interesting to watch. On Monday, I also have covered Arista Network on this channel, so definitely go take a look at it. Then on Tuesday, one of the major companies that reports earnings is going to be AMD. That is what we follow. That is also part of our weekly trading strategy, so I'll be paying a special attention on this. I will also be live streaming AMD earnings, so definitely follow the channel if you don't want to miss that. On Wednesday, there are a couple more companies reporting earnings. That is going to be PayPal, Roku, Qualcomm I'll keep a very close eye on as well. We have Airbnb, Etsy, and a couple others, Mercado Libre as well. On Thursday, before open, we have the big one, Palantir, a very major retail stock. Shopify, biggest company on planet Earth in terms of market cap, will be Apple. All eyes will be on Apple. Also have Block. All right, let's get straight into the trade results as well as what are we going to do next week along with the technical analysis. The first stock we're going to talk about is Tesla. We had an open covered call on Tesla at 265 expiration 27th October. As you can see, it has expired worthless since the stock is down massive. Before we jump on to the technical analysis for Tesla, the total net premiums that we have got from this campaign so far is $2,234.94, and our adjusted cost basis has dropped from 265 to 242.65. So effectively, we can sell a covered call at 242 or above from here onwards. And Tesla campaign we have been running for about 7 weeks now, getting into the 8th week. Stock price has had this major gap down here all the way from 242, and the stock was back to 226. And since then, the stock just kept going down. There's a lot of selling pressure on Tesla. It broke through its 200-day moving average, and the stock is now trading at 207. Let's step back for a second. Tesla was trading at $101 at the start of this year, ran all the way to $299, which is almost 3xing your money, and now has pulled back to about 207. 200-day moving average is a very critical trend for any stock because it tells you whether the stock is going to be up or down for the long term. Now, generally, when the stock is below its 200-day moving average, that should give you a signal to start dollar cost averaging into the stock. So at this point of time, if you own Tesla stock, this could be a point where you can slowly nimble into buying Tesla for the long term. We saw the volume going up during the earning and a little bit post earnings, but the volume has started to come down, which makes complete sense. The average volume right now is 117.19 million on a daily basis. You can also see that the RSI is really oversold. So this stock is potentially set for a rebound, and our next target that we want to see is the stock breaking above its 200-day moving average and then making the 200-day moving average at its support level. That is the next key level for this particular stock. If you're going to be trading Tesla next week, I'll be targeting the 255 level, which is a 50% at a Fibonacci level, and that is around the 29 delta. And you would be getting about between 310 and 325 in premium. So that would reduce your cost basis to about 197, which means that if the stock price goes below the 200 day, you will still be owning Tesla at 197. Now, what you want to see on Monday, if the stock starts running up on Monday, then selling a cash secured put on a green day does not make sense because you will start losing premium over here. You want to sell CSP when the market is red because that's when the implied volatility will be higher and you will get more premium on the put side. So as it comes to my trade for Tesla, I'm not going to be selling anything for now. I'm going to wait and watch and see if the Tesla stock can go back above its 200-day moving average, and can we see the 20-day moving average curling back up, because that will show me an indication that Tesla is back on the track to going upward. We'll see how that plays out. The second stock is going to be AMD. If you watched last week's video, you might have remembered that we rolled the call to 27th October on the previous Friday, and we ended up closing that leg for $45.02 and then actually gaining $238.33. Now last week we had a major drawdown on AMD, and we'll get into the technical chart a little bit later, but what we did was we on 24th October we rolled the call one more week. We had to pay $221, but we ended up getting $475 for rolling that call. This is where we rolled our call because we had this major drawdown on the stock price and the stock started going below the $102 mark. Our CSP as $102. Now currently the stock is sitting at 96 and it is deep in the money. Now this is a chart that I'm working on AMD right now. They are going to be reporting earnings on 10/31 and their EPS estimate is about 0.68 with a revenue of about 5.6 billion. Last week when we were reviewing AMD, our expectation was that the 20-day SMA is going to do a crossover 50-day SMA this previous week, and we will see a major upswing in the AMD stock price. And this is the best part about stock market. It just humbles you. This is one thing that I have learned as I've started trading, is that you never know when the market is going to humble you. But this is how the market is, and this is how we will react to the market. Now, when we saw the stock price going below our cash secured put strike price, we are going to roll it. The current put to call is 0.7 with a 80% implied volatility, which means that the premiums if you're going to get today is going to be massive. Keep in mind, with the earnings coming up, our volume is going to double, which means there's going to be a lot of people doing trading on November 1 with AMD. Now, on the entire AMD campaign, we have generated $1,776 so far. And you may see that we did open another put at $88 and we got about $186 as premium. Now, that I did not cover recently, but because we had such a big down that I got tempted to open another CSP on this to keep collecting more premium. If you're going to look into AMD next week, you can see that AMD is giving you some massive premiums. Like right at the money at 96, you will get about 365 in premium. The main reason is that implied volatility is crazy. You have an implied volatility of 74% all the way going up, and it even goes up over here at 85 with 78%. So the premiums are very elevated at these levels. So if I was going to be opening a CSP next week, I would be targeting the 90.91. The implied move is about $8 and $9, so that should give you the cover in case the stock falls below the $90.91 level. Here is the chart for block ticker symbol SQ. As you can see, the stock has been trending downwards for a long time now. Actually, since of August, we have been seeing the stock sliding downwards all the way from in the mid 80s all the way down to 38.99, which is basically half the stock price. 50% has been wiped out. This downtrend line has been mostly respected. We saw a little bit of a breakage right over here, but it quickly turned back up. And then we saw a little bounce over here on the 10.5, and we saw this little touch point over here and then went back. And then this tested it. We dipped below it a little bit on Friday, but it went back up. Now, with them also reporting earnings, remember this, they have a good year-over-year growth of about 20%. Their revenues are in the $5.6 billion range. From a non-GAAP perspective, they are a profitable company. We'll see if they can keep it. And when are they going to give to a GAAP profitability? That is going to be the main focus for the coming earnings. Now, this stock, similar to SoFi in the fintech space, has been hit pretty hard. And I can tell you, look at the implied volatility, 131%, which means that all your premiums are highly elevated at these levels. So if I were you, I would be targeting about the $36 level. That will get me about 1.2, which will lower my cost basis to 35, in fact 34.8 to be precise. And just in case we see further breakdown from the stock price, that will give us some more coverage. So that could be a potential play. But as you can see, like most other stocks, this stock is also beaten down to the ground. This is going to be long-term haul. So if you are interested in owning Square, then only you should be opening cash secured put. You should never be opening CSP for stocks that you don't want to own. Every single ticker that I mention on this channel are the stocks that I have in my portfolio for long term. And that is the reason I keep trading on those stocks as well. Be safe trading. And if you found any value, make sure to give us a like, click on subscribe and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.